You have not because you ask not. If you have questions about infinite banking, whole life insurance, or becoming your own banker, then make sure to put those in the comment section below, or let's have a conversation. Hello and welcome to the Durham Talents channel. My name is Jesse Durham. For today's installation in our Q&A series, I'm going to address common questions or questions that have been submitted to me, proposed to me, by folks who are vetting the idea of becoming your own banker or implementing the infinite banking concept. Let's dive in on them. Edward asks, why should I go with you versus mutual so-and-so, and lists a specific company name that we would all recognize? Great question. Let me first begin by answering the question this way. Can you go directly to an insurance company and get a policy when it's a whole life, high cash value style policy? Do you go directly to that company? No, the company is going to refer you to a person, to an agent. So first and foremost, if I were looking for an individual to help me with a particular thing, whatever they think that thing might be, I would hope that that person has personally implemented what it is that I'm wanting to do. So why I would say, and you don't have to work with me, I don't have to work with you. It can be a mutual vetting process. If you're interested in infinite banking, if you're interested in financial autonomy and independence, and you're learning about becoming your own banker, then I'm going to encourage you to go to the resource materials yourself. And then when we have a conversation, you vet me, you ask me the things that are relevant to you, and I will ask you questions, and we'll see if it's a good fit, of course. And I'm looking to help folks, and I help folks all across the country, looking to help more. And what I'm saying there is that we'll figure out if we're a good match for each other. You can tell me if I'm not, I'll tell you if I'm not, vice versa, okay? Respectfully, kindly, okay? But at the end of the day, I practice what I preach. I've personally implemented this concept of becoming my own banker for the better part of a decade now. So that's, I believe, the place to start is the person that you're wanting to get a policy from, do they personally own policies that have been built for infinite banking, and have they actually implemented that in their lives? The next question, of course, is what kind of product are they using? Are they using what Nash described in his book, Becoming Your Own Banker? Are they using whole life insurance from mutual companies that pay dividends, have a 100+ year track record, okay, highly rated, those types of things? And again, going to the book and going to the actual book, Nelson in the back of his book says that you should be working with somebody who actually has hands-on experience doing this themselves. So I'm just saying, if you compare me to some mutual insurance company, there are lots of factors that go into that. How does that company think about infinite banking? Do they have products that fit the ideal asset and how it would be built for infinite banking? And then, of course, ultimately, is the person that you're working with able to build the policy in a way that you could use it for infinite banking, the way that Nash describes? And do they have real life experience that they could share with you, show you their policies, show you how they've used this concept personally in their lives? So I appreciate that question, Edward, and I think it's beneficial for everybody to be able to hear that answer. Ralph asks, are my premiums tax deductible? Here's how I'd like to begin answering that question. Insurance is a particular financial property. Insurance is paid for with premiums, and premiums are typically after-tax dollars. So it's income that we've experienced, we've already been taxed on it, and with that money, we can buy a policy, pay a premium. So I'm not a tax expert. I'm not giving tax advice. The place to begin implementing infinite banking, in my belief, is personally. And we all experience cash flows in some way. And what I would say is you could become your own banker by funding, by capitalizing in properly structured whole life policies for the banking purpose in your life. And we're going to end up doing that with tax dollars. Now, are there tax implications with policies? Are there things that you should know? Yes, because when it comes to taxes, the growth inside of a policy is tax deferred. but you can get to it tax-free via the policy loans, the way that Nash describes. The death benefit is going to pay out tax-free. So what I'm saying is, even if we are taxed on the money that we're using to pay premiums into that policy, once it's in that entity, once it's in that private family banking system, we can have tax-free access to that capital over our whole lifetime. And then that policy will eventually culminate in a tax-free windfall to the next generation. So even if we start with taxed dollars in the beginning, we can move it into that tax-free environment. And if you're thinking long range and you recognize that you're taking tax-free dollars and putting it into a tax-free environment for your lifetime, what a win that is for you. And then walk that out even further and say, we're creating this intergenerational private family banking system where we have that tax-free access, tax-free windfalls over and over and over again, and you grow and you scale that. It's an incredible change. Gavin asks, is it better to pay loans, meaning pay loans off, or extra, meaning extra premium? Okay, great question, Gavin. Now I'm going to answer it here for everyone, of course. Here's how I prioritize cash flow to my private banking system, okay, our family banking system of whole life policies. The number one priority, of course, is to pay the regular scheduled ongoing premiums, those premiums that we pay on that monthly or annual or whatever basis that we've chosen. And it could be a mixture of those. So number one, I want to pay my regular scheduled ongoing premiums. For me, number two priority is to pay extra premiums. At least once a year, I want to touch base on all of our policies, every single one of them. There are several. To pay as much extra into that policy as I can, or as much of that extra that I could pay as I can. So priority number two for me is to pay extra premiums. The third priority in cash flow to our banking system is policy loan interest. So even if I have an outstanding loan balance, because I'm over here paying off something, paying for something, I've made some investment with capital from our policies, whatever it is that I'm using that for, I may not be in the appropriate time to repay that back because I'm still actively doing this over here, finishing it up. But I would like to pay the interest on that policy loan at least, because I don't want that to compound into my outstanding loan balance if I can. So that's the third priority for me, is I do want to pay the policy loan interest. And then the fourth is, and this is the ultimate, right? To be an honest banker, to not steal the peace, is, of course, when I have bought something or paid off something or made some investment somewhere with capital from my policy, I want to build that back into my policy. I do want to make a loan repayment. And here again comes in that extra. I want to give a true market value, a true market interest rate on that capital. That way, when I'm paying that loan back, I'm both refilling that reservoir and making sure to pay as much extra as I can. So the extra interest that I would pay back, giving my capital a true market value, should be above and beyond the interest that's going to the insurance company that we talked about just a moment ago, and is actually going to be extra capital in my system. That's going to help me grow and scale for in the future for the next investment that I make, or the next purchase that I make, or the next item that I want to pay off. So that's how I prioritize: regular scheduled ongoing premiums, extra PUA premiums into the paid up additions rider, policy loan interest, and then policy loans. So that's how I prioritize those cash flows to the policy. So to answer the question of which is better, you see where my priorities lie. I want to grow and scale this system as much as possible, as soon as possible, as often as possible, because every dollar that I put into my system is going to grow the death benefit. It's going to grow the cash value. It's going to increase my dividends over the lifetime of the policy, etc. So while I want to be a good banker, an honest banker, and repay my loans, refill that reservoir, I want to be growing the system at the same time. Nathan asks, can you use cash value to pay premiums? Great question, Nathan. I actually addressed that question just today on a call with someone as well who was saying, well, I'm learning about this concept. She was actually already in our process applying for a couple of policies, and her husband had a question, and she wanted me to give an answer for it. And the answer, or the question was what are the contingencies that I have if this or that or the other happens? Meaning, well, what if I have a bad month? What if I get laid off? What if we have some financial emergency pop up? And it's a very valid question. I actually proactively walk through that type of a scenario in the beginning with my prospective clients so that we're aware of, okay, well, we're building this policy to have some flexibility in it for those situations because life happens. Here are those contingencies. The first contingency that you have is if you hit some financial hardship, you have the opportunity not to fully fund the policy in that given month or that given year. If whatever your regular scheduled ongoing premium is, it's going to include a paid up additions rider portion, which is going to be a significant portion of your premium. You can forego paying that. You have that flexibility. Now, be aware of your contract. You should know what that means for your contract. Virtually every contract is going to have some stipulation on what its minimum is to maintain that rider, okay, on the policy, et cetera. But essentially, and you should be aware of what the minimums are for your policy to keep everything intact, to keep the policy in force, to keep the death benefit, to keep the cash value, to keep everything that you've ever put into that policy growing and compounding, et cetera, maintaining access to it, et cetera, just by paying the minimums and not fully funding it for that month or that quarter until you get through whatever the financial hardship is, and then come back and begin paying that full regular scheduled ongoing premium, and even see if you can pay extra to make up for any time lost if you can. A second contingency is if the hardship is difficult enough or long enough. The answer is yes. To go back to Nathan's original question, can you use cash value to pay premiums? Yes, absolutely. And policies can even be set up to automatically do this, that while you have a cash value, minimum premiums will at least be paid out of the cash value of the policy. So that's a second contingency right there. And furthermore, a great reason to be capitalizing into a policy. I mean, what better emergency fund to have than a compounding private piece of property? What a wonderful place to be proactively amassing your capital just for such an event. So if you've been proactively amassing capital in this private banking system, of course you can use the capital in that system to pay for ongoing premiums. And there are other contingencies as well. Could you reduce the premium or recover the premium, perhaps even depending how old the policy is, how efficient it has been used and grown? The dividend could possibly be offsetting the cost of your premium or even covering it. Yes. And there are other non-forfeiture options as well. So when a policy has been properly structured, you should have and be aware of all of these different contingencies that you have, again, to maintain financial independence, financial autonomy for both the hardships and the opportunities. I like to say the obstacles and the opportunities that life will present. So it's a great question. I think everybody should be well aware of that when implementing infinite banking. I'm glad we talked it through. Brianna asks, what is your role in this process? That's a great question, and I know it's an early question, but let's just go ahead and put it out there because, of course, the idea and what I go for with this Q&A series is for folks to have their learning curve sped up by being able to see all these different questions that we address here. So here's my role. My role is I am an educator in this space. I'm out here promoting the idea that you can become your own banker. I personally lived it for 4 or 5 years myself. My wife and I buying these properly structured whole life policies with mutual companies that pay dividends and using it for paying off debt, financing family expenses, making investments, etc. Okay. And then professionally, now for the past 5+ years, I've been helping people, and I do work all across the country, help people learn about this. We've been podcasting for years now. We've got playlists left and right with different specific sets of information on, hey, what are the misconceptions around whole life insurance and infinite banking? What are the Q&As? What are those common questions? What does this particular term mean? I have an encyclopedia series where we address the terminology, the vernacular of infinite banking and whole life and lots of different information, client interviews. Okay. So my role first and foremost is a promoter and educator, a coach, mentor. I mean, folks say different words on the idea of you becoming your own banker. I'm promoting the infinite banking concept as conceived and described in R. Nelson Nash's book, Becoming Your Own Banker. And then I'm a licensed agent. So when I say I do work all across the country, it's because I'm a licensed agent and I am an agent for folks who are looking to implement this process. So I custom build policies. I am available for my clients. We can speak on the phone. We do Zoom calls and all these types of things, of course, happen all the time. I've been running our podcast and YouTube channel for years now. So my role here is as an agent and as a mentor in this space. And if you are working with me, I'm your point of contact. And the way that I view a relationship with a client is that we can have as close of a relationship around your journey of you becoming your own banker as you would like to have. And at the same time as independent of a relationship, because the idea here is you becoming your own banker, not me becoming your own banker. Okay. Or me becoming anybody else's banker, you being reliant on me. I want you to be as independent and autonomous, financially speaking, as you would like to be, all while being accessible and sharing my best practices and helping speed up your learning curve and provide service, etc. Being here for you on your journey of becoming your own banker. So that's my role here in the process. And Brianna and I actually ended up having a great couple of conversations since I was asked this question, but there it is for the benefit of everyone. I'm a licensed agent. I'm an educator in this space, and I believe that you can become your own banker, and I believe that I can help you do that. Kayla asks, what are some ways people fund this? Great question. Now, it's Christ-like, okay? It's biblical, so I'm going to answer a question with a question, and I know I'm supposed to be addressing your questions here, but still, this is what I like to do in real time anyway, so food for thought here. Let's look at infinite banking like starting a new business. It's a good way of looking at it. R. Nelson Nash thinks that way, describes that way in his book, Becoming Your Own Banker anyhow. So look at it like a business. My question to you then, to answer this question of how do people fund this, is how would you go about funding a business? All right. Now I'll give you the straightforward answer. A great way to begin funding a private banking system is from your cash flows. Again, let me ask another question. Where do you currently send your cash flows? And probably all of them. They're probably all directly deposited. That's right. In a bank. What if you could own a banking entity yourself? You can. Okay. I do. You can. We can be about it. What if you just began carving out an appropriate number for yourself and then grow and scale that over time, an amount of your cash flows to go to a private banking system, just like you're sending your cash flows to a bank now? Make sense? Now, are there other more creative ways where we could be talking about using home equity, creative financing, business, all these different types of things? Sure. But I believe the place to start is you considering becoming your own banker. And when you arrive at knowing that that's what you want to do, you pick a number that is both reasonable, logical, imaginative, and ambitious. Okay? And devote that to building your private family banking system. That's where I would encourage everyone to start. Allison asks, does your credit score affect this? Great question, common question. I normally ask a couple of questions when I am beginning the process with someone. I want to know if they have anything in collections. I want to know if they've experienced a bankruptcy. Now, those are just some general things that are both good for me as a coach to be aware of your financial footprint, such as it is, has been, what you anticipate it to look like. That all comes about in a healthy conversation about your goals, your dreams, your ambitions, your plans, your cash flows, etc. Furthermore, we're going to be submitting an application to a financial institution, an insurance company that's been around over 100 years. So yes, they're going to want to know certain things. Now, does your credit score, I'm going to talk about credit score particularly because that was the question here. Does your credit score come into you qualifying for a whole life insurance policy? Not necessarily, other than what it might indicate in past history to someone if you have some bankruptcies or if you have things in collections. So again, every situation is different. We won't know whether you qualify for sure unless you apply. I'm not the underwriter. I'm the agent. You're not the underwriter. You are the prospect. You are the potential client. So let's have a conversation is the answer. Let's get some good information on where you're at, where you want to go, those types of things. And let's let the insurance company tell us who's who, what's what, etc. when it comes to that. Now, once you own a policy, here's the second piece I want to get to as it relates to credit score. When you own a private banking system, and especially the further along that you are in implementing the infinite banking concept, because you can get to the point where you are not at all beholden to the conventional banking system. Not for your cars, not for your homes, not for your business, not for your household, not for anything. You can get there. Doesn't happen overnight. You can get there. How concerned do you want to be about credit score at that point is my question. So be concerned about it if you want. It might be important to you, might not be important to you. But if you've got your own private banking system where you have the control, you have the profitability over the banking function in your life, how concerned do you want to be with a credit score? So I hope that that's helpful. Jan asks, can you pay extra into these policies? So the answer is yes. Yes, you can pay extra. I do pay extra. I addressed that in a question that we just had from another person about where I prioritize in a sequence of events paying extra into a policy. And it's really high up there. I want to pay as much extra premium. I want to put as much extra capital into my private banking system as possible. So the answer is yes. I would encourage you to, whether that's inheritances, windfalls, Christmas bonuses, just dedicating more of your cash flows, or you don't have a certain expense anymore, redirect that money. So lots of different ways that people choose to pay extra into the policy. And the answer is yes. And then speaking of windfalls, Eric asks, I've got a $9,000 inheritance. Should I use my whole life policy? Because he already has a couple of whole life policies, if I remember correctly. Should I use my whole life policy to buy some gym equipment that I want and then immediately replace the $9,000 into that policy? And then the subsequent question is, because will that make my cash value go up? Will it make my cash value more than what I have in there plus the $9,000? So no. So if you borrow against the cash values of a policy and then turn right around with money from your cash flow, refill that reservoir, you've not created any growth in the policy. You've just refilled the reservoir. Now, Eric was aware of this, but I'll reiterate. These are things that people need to consider, of course, when they have extra money that they're wanting to do something in their infinite banking journey with. Could you pay extra into this policy? Yes. Now, Eric had already done that. He'd already paid extra into his policy for that year. He was maxed out, couldn't pay any more extra in that particular policy. And he was also aware that he could open up a brand new policy, and maybe that makes sense to do. Maybe it doesn't make sense to do. That's going to be pursuant to a good conversation with an agent and advisor. So you could open up a new policy. Yes, also. At that point, I would say there's still always the third. If opening up a new policy doesn't make sense yet, and you've already paid the additional premium into the existing policy, there's nothing wrong with just being well capitalized and well positioned with that extra. I'm not saying that I want it to be lazy very long either. I'm not saying that you shouldn't have a serious conversation about, okay, well, if this current policy is max funded, I can't pay any more premium into this policy, do we need to be considering another policy? Maybe, but if not, that's okay. There's nothing wrong with just being well capitalized. You can hold that extra $9,000 in a segregated account until some obstacle or some opportunity shows up, right? Or until it does make sense to start another policy, or maybe you do something different with that. You make some investment with that. You put that into some business, whatever the case may be. Okay. Now, that is how I would prioritize things too, by the way, is I would be looking at all these scenarios. Have I fully funded all my current policies, and have I paid extra into all of them? And if I have paid extra, let's just revisit the conversation. Is it time to get another policy? And then furthermore, use the money. Bank with the money. You could practice infinite banking with anything. You could practice the infinite banking concept with a savings account. It's not optimal. You could practice infinite banking with a CD. It's not optimal though. Okay. But at the end of the day, I just want to confirm that it's a good position to be in, just to be well capitalized. And then one more point. I know this wasn't directly asked in this question, because, and I don't even think I addressed everything that I wanted to correctly. If you do pay extra premiums into your policy, that grows the policy. That's important. If you do start a brand new policy, yes, you've begun the capitalization phase all over again, but you've also added another branch to your banking system. Both beautiful scenarios. Furthermore, I want us to all be aware of what it could mean to actively, because Eric received an inheritance, I want to be creating inheritances. That's what I want, okay? Private family banking. I want to be creating tax-free windfalls to the next generation, which means there needs to be space. There needs to be a place. There need to be entities where a windfall can go, where a tax-free windfall can go and remain accessible, tax-free, and be growing more of this tax advantageous system. Are you understanding me? Policies could be used in certain areas where you have strategically outstanding loan balances because of a strategic and a sensible expected windfall from another area, from another life that's been insured within the family. And that way, when one person passes, just like Nash describes in the book, when one person passes, if you've been creating a system of policies, that can make sure that that system from there on is self-sufficient. I hope you're understanding what I'm saying, because that is a game changer when I first wrapped my mind around that and began moving in that direction. So thanks, Eric, for the question, and thanks for letting me address it here for everyone. If you have more questions about implementing the infinite banking concept into your household or your business or your investing, make sure to check out my free presentation on my website, and then book a free consultation call with me from my calendar link, all right there at DurhamTalents.com. This has been a great pleasure for me. I look forward to our next conversation. I hope you have a great day. Take care.